Hello, active traders, and welcome to Trading Open. This is Ken Calhoun coming at you live on December 15th, 2016. Great to see so many of you here. Special welcome to all of our new members. It's great to see so many new faces, as well as all of our regulars and our annual members and everybody here. So let's go ahead and get started with today's session. As always, all information is for educational use only. We're not making advice about what to buy, sell, or hold. By watching this, you agree not to make actual trades. We don't make any profitability or performance claims. No live real money trading is done. We do all this for a safe learning environment, and you should be using a demo or a simulated or paper trading account to make sense of all this and figure out your own trading plan that makes good entries for you. So let's start with broad markets. You can see our spiders are trending up a little bit here, but overall it's a bear market. So we got sell pressure in the house. If we take a look at our QMI, you can see it's divergent, headed up a few points. So we do have a overall weak long bias. We have a weak long bias. We got 5-6 points to the upside in the QMI and our futures. Look at our futures markets. You can see E-minis trending up along with the spiders, of course. So we got a weak long market bias. Yesterday, notice please, the market did exactly what I said it would do. I've been trading FOMC releases since the late 90s. You have a anticipatory move like this, a knee-jerk reaction, up and down knee-jerk reaction, then a resumption of the initial major trend that had been established early in the day. So you've got the initial trend, you've got an anticipatory move, a knee-jerk reaction all over the place, and then a resumption of the downtrend, which is what we saw in yesterday's session. So usually tough to trade FOMC releases because people get faked out by trying to go long on the first sign of a spike and then get stopped out. They try and buy a bounce and get stopped out, then they go short and they get stopped out. And so usually not a good idea to trade the FOMC release on the day of the release, but on days after we usually have really good volatility. So we'll see if we get some of that today. Leading the way up, we've got dust. I'm currently long this in my Fidelity Swing account. I'm scaling. I put in a buy stop order to get back in. I had sold the 56 high or whatever earlier. I'm also in dust or MGM. Anyway, it spiked up here. You can see the overall directional play. I'd sold the peak up here earlier, then I let 5 shares ride just as a kind of a placeholder trade. And now that it's finally starting to wake up again, I've got a new long trigger in that I put in my Fidelity account. I believe it was 60. Trying to remember. I should remember. I just did that half an hour ago. I think I put it in right above the new highs here. So anyway, the point is, keep an eye on dust for a swing trade if it continues to run. It's also great for day trading today because of the volatility. So we'll see if dust heads up. Similarly, you'll notice that Newmont has the exact opposite pattern. It's down here selling down with a gap down play. So we'll see if it either bounces over 31.30 or continues to go down with the short trigger 30.30 in play for that. Leading off our breakout chart list today, we have EDZ. And what I like about that one is the fact that it did not only a bullish cup breakout, but it ran up, a good 1.5 or so. So we'll see if EDZ is able to break support or resistance. Hey, morning, Bear. Today we're currently up here congesting right near 25.70 or 80, so we'll see where that goes. So we just looked at Newmont and Dust. Eli Lilly also a good, it's kind of expensive up at 70 a share, but it's a good pattern. It's a minor gap bullish cup continuation pattern. So we'll see if that one's able to break over. It's already over my earlier trigger. Let's do 71. Usually it's 30 cents as a buffer on that price point. So 71.30 for Eli Lilly for a continuation. On the gap downside, we've got Rio Tinto. It's gap down from 40 down to 38.5. So we'll see if Rio gets short under 38.20, which would be the preferred play. The counter trend pivot is if it gets over 39.10. So that's right there. Hey, good morning, Damon. We take a look at another one. We've got a gap in MDLZ. It's not doing a whole lot here. It's just kind of chopping wood up here at highs. But it is on the radar because it is parked up here in the sky. It's up at new highs right under 45, whole number resistance. So we'll see if that's able to break resistance and carry on, or if it continues on down. We've got a short trigger here at 44.20, the long trigger up at 45.4. put our VIX ETN triggers into right outside the current support and resistance areas. 2620 be the long trigger, 2580 the short. And similarly, in an exact opposite chart pattern, we have XIV. That one's actually more likely to hit because to the long side because of the uptrend bias in the QMI. So we'll see if that one hits 46. We can tag it at 4660 and 4680 for continuation longs. If we get sell pressure, we'll see if institutional sellers or high frequency traders come in on the downtick under the 45.8, which would be a low of day breakdown under this support under 46. So that would be the short of 45.8, long of 46.6. And in the meantime, we'll see where the market trends to see if we get additional breakout opportunities out there. I'm going to play things safe. Ones like X did really good for us on the breakout. It gave back most of yesterday's gains. Worth keeping on the radar in case it does a inside play. I'd rather go long this up at new highs at say 35.40. That'd be my favorite play in this 2-day chart. A quick tip, traders, make sure that you're always trading in context. Look at what the institutional high frequency algo traders did with their dark pools and tape reading and all that stuff yesterday, and use that as a lead indicator for potential price action today. So even though it's broken and selling down here, as a smart trader, professional trader, you want to be ready for a pivot to the upside in case it does take out new highs. Always be thinking a step ahead. And put protective stops in place and also your stop limit orders to get you in on the right place. I published the industry's first ever article on tape reading some 14 years ago. I'm trying to find the excerpt, which is on my Day Trading University site for your review. Unfortunately, Active Trader Magazine is no longer with us, but I do have a tape reading article. You can see tapereadingsecrets.com. That's a course I'd done years ago. Well, I'll find it for you guys somewhere. Anyway, looking for time and sales patterns as we look for breakouts or breakdowns in the market is important. And so it's good to look at, a predictive trigger for a long, in case this does a repeat of yesterday's open range breakout. If it continues to drift on down, we do not want to short right under the current support because that's right above the previous day's support. So that would be the riskiest place to go short because it's likely to find support in this region. If it capitulates and goes down and sellers hammer away at it later, we can tag it with the short play at 34.3. But always be keenly aware of how to trade cups the right way. This is like a 2-day cup pattern, right? It went up and it came back down. That's cup support. So it may do a reversal play to the upside. So we're ready to trigger the trade up here. Or if it continues on down, we go short into the low. But we do not trade this danger zone here or this high risk, short pivot area right there. We want to instead wait for larger volume, sustainable buying pressure to come in. So we'll see where things head. But I like this gap up and dust. That's the best of the trigger points out there. Taking a look at some of the other charts, it really helps to get in your mind's eye what are the strongest charts and where's the most likely places that they'll work out for good trade setups. BAC is one of my picks. 2310 is the long. You can see that right here, right? 2310 is the long for BAC. I like the uptrend. I like the pre-market buying pressure from 22.8 to 23. You can see that, right? We've gone up 20 cents lately. So it's got an uptrend we don't want to get involved with it unless it breaks over 23, and I've got a 23.10 long trigger just to stay on the safe side in case they're uncertain near the whole number. So we'll see if we get some certainty in our BAC, Bank of America chart as it continues up. 22.50 down here, the short. I may tighten that up later, but for now we'll leave it where it is. None of those are any good. Looking to see which of these have the highest volume. BP will work. $35.7 on a bounce long. Prefer to go short at $35.20 if it continues on down because that's a broken stock type pattern. Already have US Steel. All the other gold instruments like Gold Corp and Barrick and GOLD and all the rest of them are all down in the gutter, but the best short pattern is Newmont because it's got the best volatility. So we've got that in play for you as well. If British is down, let's see if Halliburton and the other oil sector instruments are down. Yeah, oil's down a bit this morning, but not nearly as much as gold, which is a far superior chart. So let's get ready today. We've got a game plan. We've got some great charts to look at. We'll see which of these hit first and where they run. As we look for these setups, we always look for plain strength, right? We trade the strongest charts out there, trade the rest, trade the best and leave the rest alone. And one of the things we want to do is make sure that we're focusing our energy on good high velocity charts with sustainable runs. Not these $3 and $4 stocks that amateurs trade. You want to trade things that can run 50 to 60 cents, of which you get 20 to 50 cents or 20, 30, 40 cents out of it. So you can't do that with the cheap stocks because they don't run very far. So you have to compensate by trading too large size, which leads to large stops, which leads to blown up trading accounts, which is why nobody I have seen tax returns from makes at trading these cheap under $5 stocks, because that's a fool's gold approach. Much smarter to trade even just 100 shares of a $20 stock than 1,000 shares of a $2 stock. I'll have some funny YouTube videos next year explaining that with some good examples. But in the meantime, let's keep an eye on our markets. We've got a open coming up here momentarily in just a couple of minutes. We've got 2 minutes, 10 seconds till the market opens. So we'll see if this sell-off that the FOMC inspired continues to drop the markets, and if it does, we'll see upside moves in VXX. So keep an eye on this and put in a buy stop order to scale into TZA like I told you guys I would this morning. I think it was 2050, 2060, something like that, with the limit 21, 22. So anyway, for a swing trade, we'll see if some of these bear ETFs move, but for intraday, we're keenly focused on our VIX instruments and banking and oil and especially gold with the inverse dust up nicely. That's the one that I showed the screen cap proof of my selling into the 56 breakout earlier, the month or two ago. Now that it's back up and it's alive, there's so much upside potential in this one. I'm going to be scaling into this significantly. Because look at that. It's a $60 instrument with upside potential in the 600 range, or to infinity and beyond, or way the heck up here. So that's a volume pivot type pattern. So I'm scaling into this on the way up. So that's something to pay attention to for a longer term swing. We're here in a day trading channel. But I also like to cover some strategic swing trading tips for you too, with good intelligent plays that make sense. So we'll see where the things head today. We've got our market open in just around 30 seconds. Dust and EDZ up nicely. We've got lots of gappers today. We'll see which of them take out early highs. MDLZ trying to punch over new highs, 45.40 the long. Eli Lilly also gaps up nicely. We'll see if that's able to take out new highs. Gaps down in Rio and Newmont. And here we go in 5, 4, 3. Are you ready? 2, 1, 0. Ding, 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 ding. Let's see who gets an early lead. Remember, the first thing you do as a day trader is sort your quote box by percent change on the open, because everybody starts off near zero and then starts to run quickly. So you want to be on top of this and see who's getting an early jump start. You got to get good at this. Like focus your energy during the first 60 seconds, not like, well, let me take 10 minutes. If it takes you forever to trade, the day trading's not your cup of tea. You got to trade who's hot. Airliners are all up. Let's see if we can tag along in Delta. That's a pretty good profile. 50.8 is my long call in DAL and Delta Airlines. Taking off from the runway. Let's see if it's able to fly the friendly skies. I don't know if that's United's tagline, but anyway, there it's starting to run. The next trigger would be 51.30 if it continues the excited run up. Flawless. Put a break-even exit on that puppy. Let's see who else we got going. Delta's taking off. Put a stop at scratch at break-even. It's starting to run for us, so that's cool. We'll see if it continues to run up, but use a break-even stop in case it misbehaves and rolls back down. Collapse it at flat. You can always rebuy new high at 51.30. Let me sort by percent change and see who else is starting to run up here. Delta's starting to run. Booyah! Got our first win of the day. Ching! Flawless. Victory. Sell at least half of it now, gang. Put a stop at break even on the rest. Next long if it gets over 51.30. So that illustrated for you a professional approach where you sort the quote box by percent change and click on whatever is running. That's what you do as a day trader. What's hot, what's not, how to trade it. Booyah. Bye, bye, bye. I told you to go long here. What a champ. Anyway, what else we got going on, gang? Let's see who's in play. Who is starting to run? See, I picked the best of the airlines. JetBlue, United, American are all going up too. But Delta was the superior chart of all of them. And instantly I knew how to trade that, so not too bad. Trail a hard stop at 51.10 on any open long. 51.10. New traders say, everybody sell it all now. Sell, 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 because it looks like it's going to drop. So everybody sell Delta right now. Let's take money and run. I got you guys in at 50.8. Let's sell this puppy before it gets back down to the entry, because your goal as a day trader is to make money. It's not to trade a breakout and then watch it come back to what you paid for it. You do that for ones that don't work out. For ones that do work out like this, you take the money and run. Next long, we can always get back in if it runs over 51.30. But now it's a really smart time to scale out of the trade, at least collapse a big piece of it. Because I got you in here, and that's a good breakout winner. What's Dust doing? Dust is starting to break out. 66.40, also epic win. 1 pointer. Muhaha. He's on fire today, exclusively at Trading Open. We don't trade stupid moron penny stocks or $3 stocks like these millennial kids who think they know how to trade do. I'm a professional day trader. This is what we trade. 66.40, and it's all for paper trading or demo account use only. We do not trade live capital here. This is all for safe learning environment trading, so you learn the patterns. I want to educate you and bring you up to speed on the exact patterns to trade the right way, and more importantly, with the right stocks. You know, you don't trade $3 stocks or $4 stocks if you're a professional trader. You trade things that actually have a much better odds of working out, like this one. All right, I got you in at 66.40. You're up over a point. You're happy. Any questions? You're not going to get a point out of a $2 pump and dump crappy stock. Sell it all now, guys. Sell. Sell, 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 sell. Let's be out of this one. You're welcome. Over a point and a quarter. I told you Dust was the best chart. Nailed it. Now's a good time to sell it because we're right under whole number. Sell, sell, sell. Oh, eventually it'll keep going back up. But now's a good time for a day trade exit. Where'd my next trigger be? It's the 68.6. Let's be kind of cautious here between 68 and 68.50. It's kind of a noise zone because of the slowdown or the stall. They're going to be a little more hesitant once it breaks over 68. So for that reason, it's a good time to sell. And thanks to traders, I appreciate the kind words. Now's a good time to sell it all, like I said, like a boss. And that's how you do it. All right, I got you guys in and out of United. Got you out at the exact or close to the exact top. We'll see if that continues to run. and dust. And I got you guys out right there before the drop. Got you in at 66.40, so long there, ran up over a point for you. And the clever thing was I got you out right under this whole number resistance right near the 67.8 trigger point. That's why it's so important that you set up these order flows and you're using buy stop or buy stop limit orders in your demo account so that you automatically get the fill as it runs, right? It triggered at what? It's 9:33. Now, if you'd just been sitting there watching it slowly, you wouldn't have been able to make the trade, but it ran up a whole point for you. So you have a buy stop order to get you in, and then I walk you through the exits with great accuracy and speed, right? I got you guys out within a dime, 20 cents of the exact top of the chart. United starting to drop. Eli Lilly took out new highs, 71.30, almost there. Reach for the sky, partner. It's almost there, 71.30 in range, not yet over it, but getting close. Pulled up to right underneath my 71.30 installed. What a brilliant call. It kept you guys out of the false breakout. Ha. That's what you do, right? Nobody I've seen in the world is this accurate in their calls. Anyway, 70, and that's the truth. 71.30 is the trigger point. What's clever was I spotted that for you guys back here, and that turned out to be exactly correctly within 3 cents out of reach of the false breakout. I'm an expert in avoiding false breakouts and setting triggers for continuations, and that's what you need to get at. 71.30 is my trigger point. Has not yet hit, but keep it on the radar in case it does. And in the meantime, we dodged a bullet or sidestepped a false breakout. Amateurs would have got in at, say, the 71 whole number, right? They would have bought the whole number or the 10 and then gotten stopped out. We didn't, though, because my long trigger is 71.30, which never hit. But May coming up, so keep an eye on that one. Dust is grinding around. Rio's trying to get a little bit of a lift here. It's a fun song to play on electric guitar by Duran Duran, but I digress. And a great music video, too, shot on location down in South America with sailboats and ladies in beachwear and all the rest of it. Anyway, 39.10. Name is Rio, and it dances in the sun. Let's see if it's able to break out new highs over 39.10. If not, if it drops, 38.20 is your short trigger. So either way, we've got a good box trading range defined to keep us out of the chop zone and in on either a pivot, which is a kind of low odds trade, or the better odds trade would be a short down here. So keep an eye on that. BXX and the market going nowhere. The spiders are exactly, the broad market is exactly 0.1%. Wow, what a rally. What a sell-off. Or not. What's our trends telling us? Slight long bias, actually moderately strong bias. And the NASDAQ trend, the ARMS index, and the New York Stock Exchange ARMS indice are both under 1. And the lower it is, the longer the bias. So still have kind of a long bias in the market despite a slow movement here. It hasn't done anything yet. But the trends are telling us we've got underlying buy pressure. So we're ready for it. On the count of 3, everybody say, bring it. 1, 2, 3, bring it. I even had a custom polo shirt made that said, bring it, that I wear it to when I play poker tournaments in Vegas, because I like to intimidate, or at least get a chuckle from the table. So I always say, bring it when I'm shoving all in. It was funny. I was playing poker at Caesars, and I was this card dead for about an hour and a half. I wasn't getting any hands. In the meantime, the guy next to me was spewed out like $400 worth of losing chips. And after an hour and a half, and I'm sitting there just playing paying the blinds and basically watching because I didn't get any playable cards. And he looked at me and said, "Why aren't you playing? You're not losing." And I'm like, "Yes, Sparky, that's kind of the trick." And in trading, traders, not losing is job number 1, or at least not losing much. So from a risk management standpoint, you've got to have more selective charts that you trade and very tight break-even exits or super tiny stops for things that don't work out if they pivot back against you. That's so vitally important. It's like one of my colleagues had said, the number one mistake he saw in his 40 years of trading, working with traders, is just people don't use stops, or they don't use tight stops. It's really important you do that. Anyway, let's see what else is in play. Dust, the short trigger is 62.30. You probably want to play that a little tighter. Let's going a loss of the 65. Let's do 64.8 as the first short trigger in dust. The reason for that, I always explain the rationale or the criteria. We got you in on the breakout. I got you guys out at the exact top at 67.8. That was a great epic call. It's now pulled all the way back down to support, and in fact may be okay for another bounce play. You can rebuy 66.40. If it gets back over 66.40, you can go long again. A little riskier than the first breakout, but still worth the shot because it's a bullish cup reversal to the upside. So starting to go up like that. But if it goes short, we go short down here. Put a break-even stop on that 40. That one's double in the money. Double ka-chings. 2 calls in a row. Put a break-even stop on it, though, if it gets back to 40. We'll follow up. But in the meantime, BAC takes out new highs. We're almost at 23.10, gang. That's our inside range long for Bank America. We'll see if we can bank a win in this puppy. 23.10 is the long trigger. If it gets north of that, we go long. United Airlines trying to take out new highs again as well. We're playing Delta over the 50.8. We'll see if it tags a new high. Didn't do a 40-center drop on the 51.30. Next long would be if it gets over 51.30. United a little pricey, so we'll forego that one. Let's go top down through our alerts, see where we're at, and come up with more for you guys. I really like this chart. Hasn't done jack squat yet. That's a good technical term. Hasn't done anything yet. Let's do a high day breakout, HOD breakout. Back when I ran this as a text-only room before they had audio and video back in the early 2000s, we'd have to use a lot of text acronyms like HOD B/O, right? HOD breakout. I can type that in the text. HOD. So a blast from the past, that's the type of texting that we would do back in the early days before the good folks at GoToWebinar and the other companies came out with good multimedia platforms like this. Anyway, risky because there's a false breakout potential above that. But I don't want to sacrifice 40 cents of profit waiting for the safer, potentially safer trigger 26.20. So because of the strength here, we'll take a shot if it gets over 25.80. We're not over it yet, but if we break resistance at 25.80, you may want to try EDZ. That's our emerging markets bear. And if we go short, I got a 24.8. We got to tighten that up. Let's use, we can still use the secondary too, but let's put the short at 25.50. in case it collapses. But I like these kind of charts. You got a big, huge monster run that's consolidating. It's kind of like a give me. It's more likely to keep running up, so we'll see if it does so. Coming up in just a minute. Next up, Newmont trying to get a lift here. 31.30 is my long call. We're not there yet, but it's headed your way. So we'll see if it gets over 31.30. This is great because there's so many good opportunities to trade correctly once you know what charts to trade and how to trade them. Eli Lilly, remember 71.30 is a long trigger. We got a 69.6 short. I'm actually going to tighten that up because we had an upside trigger, or an upside move, I should say, earlier. Let's use 70.7 as our first long in Eli Lilly because the current micro resistance is right here near 70.62 or something like that. So that's the tail here. So right above that would make sense because we're just buying strength, right? It's going up. It's pulled back down to support. Inquiring minds want to know, are we going to get the pivot out of this or is it going to continue on down? Either way, we're ready for it. The long trigger is there. Your short trigger is at 69.60. Down here, we're going to play it a little safe. Actually, let's tighten that up. I don't see any compelling reason to play it that tight given this pattern. So we'll tighten that up to 69.80, just a loss of support here. Next up, Rio. Like I said, it was going to go up, and there it goes. So 39.10, you can tag it at the 22, should be okay for sequential scalps. 39.10 and the 0.2. So Enemy fighters headed your way. We'll see. Luke, get out of there. We'll see if it's able to break out to new highs. Actually, it's Chewy, get us out of here. 39.10 is the first long. We'll see if it takes out new highs. Be interesting to see the new Star Wars movie when it comes out. I haven't been to a movie theater in over a decade. Why, right? So I'll wait for Amazon like I did last time. But looking forward to if you always think about yourself, your trading is, you're in a TIE fighter, you're in the X-Wing or a TIE fighter, depending on your inclination, and you're trying to dodge and duck and do the right thing when you trade. 44.20 hit. It's starting to work out just a little bit. It's a dime in the money for you, but use a break-even cover stop in case it lifts back up. That's probably the most important thing that you will get from me as a trader. You get my word on this. Not only all the great wins and all that, that's cool, but the main thing is how to manage risk when things don't go your way. I'm not saying this isn't going to go our way. It's in the money short from the 20, but what the contingency plan is, what do you do? And the answer is you don't, be like a deer in the headlights and you wonder what to do and freeze up. What do you do if a trade that you're in starts to go against you? What if it misbehaves? Show it the door, much like a misbehaving date. And have a Rolodex of numbers. So you got a plan B or C or D or E or F or G or H. Anyway, the point is we tagged the short there. It's starting to work out. The most important thing you need to learn from me is what happens if it tries to screw us and go back up. What you don't do is, what I used to do, incorrectly losing thousands of dollars, was, well, maybe it'll go down because it did go down here, and all this rationale crap. The thing about professional trading is it's all about the money, period. It's all about price action, period. It's all about super tiny micro break-even stops, period. That's the most important thing you'll learn from me. So this is in the money for us, which is cool. But if it did reverse back up course, in the back of your mind, you should be saying, I'll get out at break-even if it gets back to my entry. We called the short here, and it's starting to work out for us. It's 15 cents in the money, so that's starting to be productive, which is kind of get the party started. You got invited to the party, but you didn't get the phone number of any nice person that you wanted to spend time with. So you got in the front door, but what happens next? Well, it's a good time to cover a little bit. Take a scalp, put a cover stop at break even on the rest. That's the main thing I'm trying to teach you guys. Break even exit if you're wrong. Once it moves a nickel or dime, okay? That should be your default setting for everything you learn from me here. If it runs 10, 15, 20 cents and then stalls and pivots back, in this case up, you'd cover the short at break even, not up here, not up there, not up there, because that all adds up over times thousands of trades over your life as a trader. So you want to play it tight. Okay, so maybe take a little profit now, put a cover stop at scratch on the rest. Who else is starting to run here? Newmont's trying to get a little bit of pep in its step. 31.30, the long, not there yet, but headed our way. Getting some buying pressure, lifting up to new highs. The difference in making it as a trader and not is, ask me about any good trader. And I told you Bank of America would be along at 23.10. Flawless victory. Sell it all now if you are a new trader, because mission accomplished. We're at the previous day's high. I said to go long at the 10. You should have been selling at the previous day's high or 20 cents in the money, which it did, right? It ran all the way up here. Once something runs 20 cents in your favor, once it's moved in our favor by at least 20 cents, exit half to lock in a gain and trail a stop at break even on the rest. So if it comes back down to our entry, we scratch out the balance, but we still took a little profit along the way for our trouble. Always sell into previous day's highs. That's one of the many strategies I teach and have for over 17 years with thousands of traders live at Trading the Open. The right place to be for trading the right charts, not these moron $3 charts or penny stocks like the amateur kids out there trade and make believe they're making money with that. Show me a tax return, anybody that claims to be making money with penny or $3 stocks. Ask anybody in the whole industry, by the way. I'm going to put this video on YouTube because I want hundreds of people to see this. Ask anybody that's trading these cheap moron $3 stocks, and they usually have black background charts to hide the fact that there's not much liquidity in that instrument. They want to hope that you don't see the light of day by exposing their charts which have super low volume and low volatility in their junk stocks. Use white background charts so you can see with clear contrast the 2-day pattern, the open range breakout length, the volume that it's currently trading, Make sure you're trading charts like this. This makes a lot more sense to trade than the cheap $2 or $3 stocks. Anybody that claims to be making money trading $3 stocks or $4 or $5 stocks is cheap, junky, amateur, broke trader, doesn't work stuff, ask to see their Schedule D tax return, and you will hear crickets chirp. And a lot of excuses. So professional traders, we trade things like this. It makes a lot more sense. All right, so that's what I specialize in. So getting you guys on the right side of this stuff. Newmont's starting to head up. 3130 is a long trigger. We're not there yet, but headed our way. So we'll see if NEM gets a pivot. Gold has been a strong sector for us. Delta, we nailed the first breakout for you guys over 50.8 earlier today, and I got you guys out near the pivot, so that was good. 5130 is a secondary long. That's in the red now, or it's not doing well. It didn't take out an initial stop, but it might. So that may be a not good trigger. I would still rebuy the over 5130 because this is a nice up gap continuation chart. So may get some institutional buyers coming in later. But in the meantime, we want to play it safe. XIV, look at the linkage or the correlation. You know, I used to be a corporate statistician for the Ford Motor Company. I'm an expert with numbers and charts. I'm a certified quality engineer, nationally certified quality engineering guy. So I've got all the technical chops in the background up the wazoo. Well, anyway, look for correlations. Remember, R equals close to 1, right? You're looking for a tightly correlated data set as a lead indicator for setting up a trade. So if your spiders, meaning the market is up, or if you're trading the minis and you look at the ES, it's up. 6 of one, half a dozen of the other. We got an up chart in the spiders. You'd also be looking for a potential long in XIV, right? We see no such evidence that we've got any long on the horizon, but a good smart professional trader says, I want to buy a high above the breakout because I know these two are generally correlated very strongly, the SPY and the inverse VIX ETN. So anyway, for that reason, our XIV first long trigger is 46.6. That makes perfect sense. Watch this. I mean, it's not going to run up right this second, but for later in the day, we'll see where it goes. Who else is starting to run? EDZ hasn't done anything yet. Looks like sellers are mostly in charge. The short trigger is 25.50 right there in case it gives some back and does a mean reversion. You may have seen my articles in technical analysis of stocks and commodities on the mean reversion or the 50%, whereas for many years I just simply called it a 1, 2, 3 pattern. You often get a move up, retracement to around half, and then a resumption of the initial trend. Very common pattern. Well, we'll see if we get a mean reversion drop to capitalize on an EDZ if it does sell down. If the buyers continue in, which would be my preference, I'm a professional breakout trader. I like seeing you got an ascending triangle here with the breakout up to new highs. That would be a better play up here. And so we got a 25.80 long if it does break that. In the meantime, dust is kind of chopping wood. LLY is trying to give us a little bit of a lift. 70.7 is my long call. We haven't yet triggered that, but we're getting close. We're currently at 70.40, 36 by 41 on the inside, 37 by 5. So we stay clear unless it breaks over 70.8. But if it does, or 70.7, I should say, that's our long trigger. It's trying to dime over the current high. MDLZ drooping here. 44.20 had been the short. We'd covered it scratch. I would reshort it if it gets down to, say, 43.90, a loss of the whole number. Let's tighten in a bounce long like we did for Eli Lilly. We'll also tighten in a bounce long. That's the best bounce long pattern, by the way, is if something gaps up and it sells down and then starts to resume its uptrend. That's the better odds bounce long rather than something that's sold off and then you're trying to catch a pivot because it looks cheap. That usually doesn't end well. This is a better chart because it has the power of institutional pre-market buying on its side to validate a continuation uptrend in market. And that's a rider downer. That's an important tip to get, is overall strategic direction with high frequency trading and dark pools and liquidity, and wherever our tape is taking us with price action, I'm going to be on top of it for you here. And just a reminder, I wanted to wish you all the very best for a happy holiday season. In our tip sheet, we're looking at every 10 cents in time and sales as a decision support tool for tape reading. I've been teaching traders this nearly 20 years. I got a lot of copycat competitors that try to rip off unsuccessfully my tape reading approaches and my tape reading training. I'm the original guy in the industry who started teaching that, other than, say, Jesse Livermore with Reminiscences of a Stock Operator back in the day, but I'm the first electronic trading educator to teach people that back in the 90s. And I have proof of time-stamped, date-stamped websites and all that support of that, and my article in Active Trader Mag called The Tale of the Tape from the year 2002. In fact, that was my very first public speaking appearance in the trading industry, was doing a time and sales presentation in the year 2000 for what was then known as the Online Traders Expo. That was the original one before Money Show bought it out, that my colleague Tim Berkwin and his colleague had founded, and that was my first presentation. I'll never forget, we had over 160 people in the room. It was standing room only, and I was teaching advanced tape reading. Then I had copycat competitors come along and try and rip off my ideas, but I'm the original in tape reading. And so let me give you another couple of quick links here, and I have proof, right, with timestamped references. Anyway, tradingopen.com/tto.pdf. That's a good resource for all of you who are new members. I wanted to welcome all of our new faces here. And also here is the handout deck from my Caesar's Palace live Las Vegas presentation from last month, trademastery.com/LVTE, abbreviation, TLA for three-letter acronym for Las Vegas Traders Expo. Anyway, that's from this year, from just a couple of weeks ago. So be sure to get both of those as my gift, as resources to take a look at the different patterns. So let's get back to our markets and see where things are headed. Likely things are going to take a break. Delta Airlines continues the madness. I told you it would be a good breakout of 50.8. And again, so the 51.3 is alive. It didn't take out a 40-cent stop. That would have been 50.9. So that trade stayed alive. So if you got in the first time, you're in the money now, which is good. And if you waited or procrastinated, probably even better from a peace of mind standpoint, we're in the money again. Go ahead and sell half now. Put a stop at break even on the rest, because we're starting to get near a 10 o'clock pivot. And oftentimes at 10 o'clock, the markets will spell doom and destruction and despair, and the markets will roll over and do the exact opposite of what they've been doing. So for that reason, whenever you're doing a professional day trading breakout trigger like these were, I got you guys in at 50.8, I got you in again at 51.30. I won't mark it out. Anyway, the point is, we're in the money, but be cautious. Let me walk you through the exit. Trail a hard stop at 51.45. I'm going to use a nickel trailing stop on this. It's like squeezing an orange and getting the juice out of an orange or grapefruit or whatever. You want to squeeze the juice out of the trade, take all the profit, and then throw away the rind, the leftover, before the institutional traders, the sharp angle traders, take your money back, right? I got you guys in at 50.8 and again at 51.30. Brilliant calls in Delta Airlines as it continues to take off from the runway. Flying the friendly skies, Delta's up at new highs. I think that's actually the tagline of a different airline. But who cares? We're in the money. We're all good. We are jubilant. We're excited. Put a trailing stop at 51.50, gang. That's going to be play within a dime now. Play super, super tight. Super tight. Get out at the very first sign of a rollover. If it loses 51.50 in the tape, I'm a professional tape reading trader. We sell it all. Look at the inside marker. We're 52 by 51 on the inside. We're going to see if we get some selling pressure step in. Let's take a look at the sizes. I have a shooting star. That's not good. So I'm nervous long and expecting to sell any second. Enemy fighters coming your way. Chewy, get us out of here. Sell it all if it gets under 51. There we go. Sell, sell, sell. Take the money and run. Walk you guys through the exact exit within a nickel of the exact freaking top. And that's how you day trade. Any questions? Oh, how can you join as an annual member of Trading Open? I'm glad you asked. You can go to tradingopen.com/annual, and you can see how to upgrade your monthly membership to annual. And if you're not yet an annual member of Trading Open, why the heck aren't you? I mean, you could be out there trading cheap $3 stocks with my moron competitors, or trading the E-minis, which finally starting to move a little bit. Or you want to trade professional charts like we do around these here parts, right? This is the right place to be for professional trading. Give yourself the gift that keeps on giving. Upgrade to annual, tradingtheopen.com today.